In real estate, never are all three of those easy. They're always one of them is really hard. If all three are easy, then everybody would do it, and real estate would be something that everybody does.
Hey, Nick, this is Jordan from Dallas, Texas. My question for you is, for someone that is a smaller operator, getting to scale and getting to managing, hundreds of millions of dollars worth of assets, what is the key to growing to that scale? Would you say it's investing heavily in acquisitions teams, finding investors, all the above? Is there something that's specifically most important? And is it important to have a criteria where you're looking for only larger deals? Is nickel and diming it still an option? I would love to hear your input on that. Thanks.
Jordan, thanks for your question. A couple parts to it. Number one, are we still nickel and diming, or do we only go after bigger deals? We're buying a lot of small deals. I think the secret sauce for us is that we're not afraid to do the work to close a lot of deals. We built the systems, we built the company with 45 employees now. Everybody has a job, and we can do the work to close small deals. And that's where we find alpha, because if you can only close big deals, there's a lot of big shops that only close big deals, that want to deploy big amounts of capital and want to do 4 or 5 deals a year and do their $100 million. They get the best debt terms. They have some of the lowest cost of capital. They have the scale and the size. So if you're competing against those folks, that's fine. That's great. We do it occasionally if we see something we really like. But the real good deals are sub-institutional, meaning smaller, sub 10 million, even sub 5 million, right around the $1-2 million mark. Those deals can be the most lucrative because they're too big for a small investor, somebody who buys duplexes or commercial real estate in their town, and they're too big or they're too small for the big players. The big shops that deploy a lot of capital every year don't want to mess with the small deals. We are even growing in size. We don't do the $500,000 deals anymore unless they're in the same town as one we already own. But yes, closing those deals can be very lucrative. And how lucrative? How much money do you need to live? How important is a couple $100,000 for you? Because when you can buy a deal for $1 million and a year later it's worth $2 million, and you've created $500,000 for your investors and they've doubled or tripled their money, and you've created $500,000 for yourself, I don't know about you, but $500,000 gets me a talented employee for 5 years. $500,000 I personally can live on for several years. So that's serious money for me. I'm not going to ignore that. That's, definitely not a waste of time. The second part of your question, what has really been the key to scale? There's 3 really hard parts of real estate. Number one, it's deal flow, finding deals. That's part one. I'm going to hold up 3 fingers if you're not looking at me. Number 2 is debt. You need to be able to source debt from lenders. And number 3 is equity capital, LP investments, the cash. Because every deal you close, you need a chunk of bank debt, usually 50, 60, 70%. We're at 50 or 60 right now. And then you need a lot of equity. If you close a $10 million deal, I need $6 million from a bank and I need $4 million from, equity limited partners. So you need a deal first, then you need a bank, then you need investors. All 3 of those things. The key to scale is getting really good at all 3 of those things. So the bottleneck is always one of those 3. And just in general, if we zoom out and we look at the real estate market as a whole, the real estate market, one of those 3 is always going to be hard. The banks either are going to be tight and not lending very much. The LPs, the limited partners, the capital might be tight, meaning nobody's got any cash or everybody's afraid, investor sentiment's low, people aren't as willing to invest in, real estate deals. Number 3, the deal flow might not be there. Recently, it's been the deal flow, right? The bankers love storage right now, commercial real estate of all kinds. The LPs love commercial real estate. This has been for 5 years running, but the hard part has been deals. So you always see, if you're on real estate Twitter, which I'm all the time on Twitter, you see somebody complaining about one of those 3 things. Either the banks aren't lending, the investors aren't investing, or the deals aren't coming. For the past 5 years, it's been the deals, right? The other 2 have been very easy, just generally speaking, not for everybody. So the key to my success has been focusing on the bottleneck, which has been acquisitions. We have 5 full-time cold callers. We have a broker that sends us a deal every day. We have 2 underwriters, a data analyst, and I have a CFO, VP of finance. Those 4 people are full-time looking at deals. The 3 of them full-time, that's their job, 40 hours a week each, looking at deals. They're doing competitor analysis. They're running cash flows. They're calling competitors. They're building out the models. They're seeing what we could possibly offer. Then we have the 5 full-time acquisitions guys that are dealing with the owners, trying to figure out, trying to make offers, figure out what we can buy. So that's been where I have focused heavily and spent a lot of money. We have millions of dollars, that we've invested in this process and these people that we're paying every year to find deal flow. Now we've also, on the sideline, we're working a lot to source a lot of new banks. Debt is getting a little bit tighter, so we spend a lot of time working on putting a lot of irons in the fire. You can't just reach out to a couple banks and expect the stars to align and find the best terms, because in order to buy the deals, you have to have access to the best debt. If somebody else has cheaper debt than you, they can afford to pay more, they'll get the same yield, and they'll win the deal. So we're constantly working with banks. What can you offer us? New banks, who do you know? How can I, learn more about you? So it's a ton of work. Dealing with bankers is a ton of work. I understand why people don't do it. The third part of the tripod is the investors. That's where Twitter, this podcast, my network has really come in. And we have over 1,250 people on our email list that get our deals. We have 275 active investors. And I have spent a ton of time and energy over the years building that list. So how have we scaled? We work our butt off on all 3. We work our butt off to find investors. We work our butt off to work with banks, and we work our butt off to find deals. In real estate, never are all 3 of those easy. They're always, one of them is really hard. If all 3 are easy, then everybody would do it, and real estate would be something that everybody does. There's always going to be a tough time. In 2009, right after the great financial crisis or during the great financial crisis, the banks wouldn't lend. So when the banks stopped lending, commercial real estate got really hard. And the investors, many of them wouldn't invest. But the deals were easy to find. There were great deals back then. Everybody says, oh, I wish there were deals like there were in 2009. No, you don't. You wouldn't be able to finance them. You wouldn't be able to come up with the cash. So there's always something that's really hard. We at Bolt Storage are trying to build a sustainable real estate company that can buy good deals. We can be very picky. We can look at 25, 30, 40 deals for every one we buy. We've built the pipeline and built the business to nurture all 3 of these things so that we can buy storage every single year, year in and year out, no matter what happens. We can dollar cost average into storage and operate it the best that there is. I guess the 4th, maybe there is a 4th, leg, and now it's a stool, not a tripod. Maybe the 4th leg of the tripod is the operations. We are very, very, very good at operating self-storage and making it more valuable. And we know that we can make it more valuable, and that's why we're able to buy and build so much. And that's why some of these deals that we bought a year ago, we closed the refinance on one we bought in April of 2021. So a year and 1 month ago, we closed a refinance last month for $6 million. We bought it for 1.9. That has fueled our growth, right? Because we sent all the $950,000 that we got from investors, we sent it back. We had $2 million left over. $1 million of it went to LPs. $1 million of it went to us to go invest and buy and build our company. So when you're really good at operations, you can get some competitive advantages, and that helps scale as well. So that's the answer. It's not easy. It takes years. It's really hard. You have to know how to run a business. You have to know how to hire. You have to know how to train. You have to know how to manage. And you have to be willing to invest a ton of money. I mean, my partner and I are personally guaranteeing a lot of debt. My partner and I are doing the uncomfortable work of hiring and managing a lot of employees. And frankly, we're taking a lot of risk. So that's the key to scale. It's no secret, but I hope that helps. And Jordan, thank you so much for asking this question. Hey guys, I have big news. I recently revamped my sales and customer service team at my self-storage company using folks in South Africa. Listen to this English accent.
Hi there, my name is Anton and I'm a sales professional from Gqeberha or Port Elizabeth, which is in the eastern province of South Africa. I've been in sales for about 8 years now with experience in hardware sales with some of the leading brands in the world, such as Canon, Panasonic, and more recently Red Bull.
Okay, now the surprising part. The person you just listened to is available for hire right now, and they're asking $9 an hour. If you want an introduction, if you want to hire this person into your business or at least interview them, send me an email, nick@sweatystartup.com, and I can make an introduction and offer you $1,000 off the recruiting fee. nick@sweatystartup.com.